And good afternoon. Welcome into Market Talk for this Thursday, January 13th. Great to have you with us once again, making us part of your day. I am your host, Jesse Allen. Thanks for joining us. Find us online. MarketTalkAg.com is our home on the web, MarketTalkAg.com. Find us on Facebook, Twitter, Instagram. All of our social media links are there. All of our streaming sources are there as well. Spotify, Apple Podcasts, you name it, you could find us there, and also all the latest news of agriculture and much more. It's all online, markettalkag.com. Well, as we look at the market trade today, it's a down day throughout the grains as we saw a lot of money flow out, a little more mixed in the livestock markets, but we got plenty to discuss today. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us this afternoon. Bryan, good afternoon to you, sir. And I don't know, is this market a delayed hangover from yesterday's numbers, or is it something else that you're seeing here initially as we wrap up trade?
Yeah, great question, Jess. Yesterday we saw by the end of the day, we saw corn down a couple and beans up about 13. And so, from a historical perspective, the January report has this history of the most volatile of the 12 reports, supply and demand reports in the year. That day is the most volatile, either up or down. And neither of those expectations, or if you were expecting bullish or bearish, really came to bear fruit yesterday. So it was really I'm going to say in summary, kind of a non-event. We talked about where some of the changes could be. So, for instance, we saw ethanol usage up, but we saw exports down. There's a net difference of 5 million bushels between the two. It's immaterial. So we didn't really see any changes of consequence to the number that what it boils down to is what's the carryout number look like? And it just was a little bit higher for corn and beans. Today it looks to be more of a either reflection that maybe farmers are giving up on some of this old crop stuff and saying, I didn't get a bullish report. It's mid-January. I need to sell. Could be some of the technical trade. I think probably the biggest thing right now is the bean market and corn leading the drop. And wheat's got a tough day too. But those two markets in particular, if you look at where it's been really hot and dry in South America, there's a real cool down coming next week with good chances of moisture. When I say good chances, like 80, 90%. And so hard to buy that forecast at these prices.
Very, very true, Brian. Well, I look at the markets today, and we have some of that old crop selling, but you look out to some of the deferreds in 23 contracts, maybe for corn, beans, they're faring a little bit better today. So a lot of this really, I would have to agree with you, probably has to deal with that South American weather forecast here in the short term as we focus on the 22 crop.
Yeah, it's exactly right. So the focus, there's going to be a lot of focus. Focus is on yield potential,
Hmm.
and focus will be on what it looks like for the second crop corn in Safrina. Focus is going to be on the money flow. There's going to be a lot of focus in a lot of areas that we need to, I think, really set our wheels in motion of how we want to look at this for the next 6 months. Um, I- One of the things that I guess I'm looking at is you've got the energy complex at a level where it should support ethanol, but you probably have a finite amount that you can push that market as far as usage. So, Jess, I keep coming back to so critical this time of year. We're about the midpoint in January. It's like the midpoint in July in the southern hemisphere. Rain or lack thereof is everything right now. And then I want to push over into the wheat market. You just didn't get anything really in those world numbers yesterday that the bulls could bite into. And so you look at crop conditions and really that Black Sea region, Russia, Ukraine, the wheat's in good shape. So I didn't want to go too far off what you talked about there, but
Yeah.
I think strategy is going to prove very beneficial to producers right now.
Well, as we've seen with the wheat market, staying there real quick, we have had pressure here in recent days, even before the report. So one has to wonder if, not getting a necessarily bullish or bearish report for wheat, wonder if maybe we're just back to some of that pressure that we saw before all the January data was released, Brian.
Well, it's a couple of things. If you go to the end of December, December 28th, we saw a bearish key reversal in the corn market. Hasn't taken that out. Not the best of signs, first of all. But second of all, right, if you really look at and ask yourself, well, what is new? What is the new fodder to feed the bulls? you might find that you just don't have a lot of new fodder. So the old saying is, you got to feed a bull. It doesn't take anything for a bear to lay down, and we might start to see that kind of mentality develop. But the one thing I want to go back to, to your farmer listeners, is that um, we had a really good post-harvest recovery, and in a bull market, wherever the price is, it's there for a perceived reason or actual reason. You can continue to push that market higher if you feed the bull. But if you don't, the problem is you get to a point where investors look at it and go, well, yeah, it could turn hot and dry again next week or after the rain, but do I really want to buy $6 corn? And as a farmer, you got to look at this and go, well, it's mid January. When don't I start selling this and moving corn? So I think that kind of mentality is a little bit different than we saw at the end, to maybe a lot different at December, where when we talked about this, farmers just seemed pretty content. The trend was up. They didn't want to take income this year. Ethanol was bidding higher. So I'm not a doomer and gloomer. I'm just a realist that, think about it. If we're at the average price of the last 50 days, we're losing momentum.
Well, to your point as well, Brian, for folks who maybe didn't protect themselves ahead of the report, I know there's a lot of talk out there from various analysts saying, hey, find a way to protect yourself and build a floor ahead of the report in case we kind of fell off here. And to some of that increased farmer selling, what do you recommend to producers right now as they look at us maybe losing some momentum and backing off a little bit here in these grains? I mean, is this a time where they just got to say, all right, it's time to move some of this
Mhm.
crop that we're sitting on?
Yeah, we've seen these pullbacks where the basis picks up because ethanol is chasing the market, but we're getting some signs that that is starting to slow too, that they booked enough corn, that type of stuff. Um, I think you just look at the overall bigger picture. We're still at the very upper end of this big, range that we hadn't seen prices since May, and we're back toward these levels. And you get into January, and one of the things that I kind of encourage people to do, if in doubt, just set up a weekly sale or a date every week that you just start selling some and dribbling this out. What we're trying to avoid is a very catastrophic week somewhere down the road where all of a sudden maybe the acreage number isn't as friendly as we thought it would be, or planting gets off to a really good start, and all of a sudden it just starts tumbling and you know coming under pressure and under pressure. And now you're looking back with regret, but you're waiting because, well, South America's crop isn't in the bin yet. It could be weather. Usually by then the market's starting to gain the momentum in the other direction. So we're trying to avoid that. So my advice is to if you're holding on to significant inventory, keep your pay raise, start selling some of this. Recognize if you want to own. If you want to own, it doesn't have to be in the bin. You can buy it on paper. And I always tell my customers I can own whatever you want to own in less than a minute. So owning's not an issue. It's if you own a bunch and it starts losing value, we're only human. We have a tendency to be hopeful and wait for the next day and the next day and the next day. And sometimes those days don't come. Commodity markets are always unforgiving or very unforgiving when they decide when they're done, they're done. Charts look a little iffy right now.
Stair step up, elevator down. Another old adage that we hear a lot about these markets. Brian, I want to ask you as well. I know some of the inflation worries out there. We saw the CPI yesterday up 7%.
Yeah.
I know just some worries there. We had the dollar break a little bit yesterday. I mean, what are your thoughts with some of these outside markets and how that's all playing into our ag commodities?
It's a good question. So, investors, what do they look at? They look at rising interest, rising inflation, right? And investors cannot look at CDs or money market. They're losing propositions at this point. So, what else do? You invest with hedge funds or big, and a lot of these have certain parts of their mutual funds or their hedge fund that may be buying commodities. So we're seeing what we think is an inflationary push on the commodity complex this year, um, because of money flow. If you look at the net long positions in corn and beans by the Commodity Futures Trading Commission report that comes out each Tuesday, you'll see that we're close to historically large. So that's a money flow to me, and it could be for inflation or money managers who have a lot of equities. They want to counter that off. So So we haven't seen that in a long time, but we've seen that historically. 2008, we saw that equities blew up, commodities went right with it, energies went higher. So I think you might be sensing or seeing some of that. So the question is, well, then should we do anything if that's the case? Inflation is going to take over and the markets are going to move up. They've already moved up, and that's my concern. Is you can't let real dollars in your hand escape. That's why we would sell and retain ownership, maybe with a fixed risk option out to July or a bull call spread, something where you go to bed at night, you cover your downside, you got upside potential. I don't know what more you can do. You're not some kind of wizard who can outguess all these events and black swan events and weather in South America, but you can use, going back to what I said, you can use the strategy.
Great advice. Let's look at livestock. Cattle futures faring okay today. Hogs a little more mixed. Front months were down on hogs. I know we continue to have some of the COVID worries with worker absenteeism and slowing trade speeds, and it really doesn't seem like that has changed. That seems like the big fodder in these livestock markets right now, Brian.
Well, I think it's a double-edged sword there that both don't work in the favor of higher prices. You're backing up chain speed, and with COVID, you're in theory pushing demand down because people just aren't going out, or they're not necessarily. I don't know if they're going to spend the money in supermarkets, but this COVID thing is real. It's widespread. It's keeping people cautious and isolated. Um, I can give a personal experience. We had to go through our family, and we've been kind of at home for 10 days. We haven't gone out to any restaurants.
Hmm.
So that's kind of a microcosm of maybe how a lot of families might be. Um, so I actually think the market has fared pretty well. If you look at like April cattle as my guide, they're about $5 off the high recently. But given the spike in COVID, I'm glad it's not more than that. So I'd make the argument they're holding together pretty well. They're at the same price they were back in mid-November. So they've been higher and then lower and then higher, the new highs, and then lower again here. So happy with that. Hog market, it's got some room to go if you look at those deferred months and then look at where the cash index is. But we're continuing to see steady demand there. Beef and pork see good exports this year. Underlying support, India will be importing.
Hmm.
Um, so you've got some positive things out there. Today we saw a headline. I don't know how deep to read into it that China is suspending imports from Canada beef because of a strand of mad cow or something or
Yeah.
another. Uh, Probably temporary, but nonetheless could be a real opening for the U.S. to capture some business.
A lot of things to look at there. Glad you mentioned that pork to India. Very big news item here this week. Brian, how about the dairy market? Anything you're seeing there as we wrap up the week?
Yeah, wild volatility. These big pushes in cheese prices and non-fat dry milk, and record high prices or close to records. New contract high prices. Got some reversals on the charts today. As an example, the February milk contract hit a high today of 22.95, but the last trade now is 45 lower, um, which is at 22.18. And so we're what, 22, like 50 cents off the high already. Um, that's, closing in on $23 milk and then reversing today is, if I'm a dairy producer, I'm really, on top of this. These are the kind of prices where if you start selling now, I just don't see how you can make any argument that you go wrong. Um, Lot of volatility. Usually markets, they accelerate upward and then they get very volatile toward the top. I'd like to argue that is what the milk market is doing, with most contracts reversing downward today, at least at this point. The market trades until 4. It might be sending a very big sell signal to the dairy industry.
Well, Brian, great stuff as always. Any final thoughts you have for us here on this Thursday?
I'll go back to just, if I'm a producer and of any of these commodities, really concentrate on the strategy part of it. There are so many moving parts this year. I think I've done this 32 years. I think back to sort of what I'm going to call the easier days. You kind of just looked at U.S. weather and planning and touching. You didn't have a lot of news. Here we're looking at South American weather. We're looking at what happens in India. We're looking at energy prices. We're looking at ethanol. We're looking at all of these things and trying to make sense of how the market's going to weigh those or vote on those. So there's a lot of things to outguess. I look at the corn market right now, and I look at March corn closing at 587 and a half today, a little bit under 590, and we could be 650 in a month, or we could be 540 in a month. So I look at that and go, well, that's the reality of the world we're in. Um, how do I want to handle that? How do I want to prepare for 650, and how do I want to prepare for 540? And I go back to the strategy. So I'm going to kind of highlight the strategy concept as we move forward.
Well, if folks need help with their strategy, I know they could reach out to you and the team there at Total Farm Marketing. TotalFarmMarketing.com is a good way, but also a good old fashioned phone call works too, doesn't it,
Yeah,
Brian?
we love the phone calls, and we appreciate those. 800-334-9779. That's nice conversations and make sure that we're connected. We can hear a lot of times in a phone call, you can hear what a person's trying to say. Sometimes when you read an email, you're not sure what they're asking or what they're saying. So we'd appreciate the opportunity to have that conversation.
800-334-9779. And again, TotalFarmMarketing.com. Brian Doherty with Total Farm Marketing. Appreciate the time, sir. Have a great rest of your week and weekend. We'll talk to you next week.
Jesse, thank you. Much appreciated. Same to you.
Brian Doherty with Total Farm Marketing, our guest today here on Market Talk. That's going to do it for the show on this Thursday, January 13th. I'm Jesse Allen. Have a great afternoon.